All right. So, guys, good morning, and I trust you are all doing well. We want to switch our attention to treating the topic called not-for-profit making organization. So, we look at accounting for not-for-profit making organization. It's a very simple but little delicate topic. So, accounting for non-profit making organization. Now, as you do well know, that there are some businesses that are not in there purposely for making profit. What they are in there is that you do realize that their purpose herein is to actually serve the interest of its members. So when you talk about for not for profit making organization, their purpose actually is to see to the welfare of their members. All right, so is to see to the welfare or to seek the welfare of their members. Not only that, they come in together to have some kind of fun activities. All right, so it's not just welfare. There is also the concept of fun activities. But the underlying factor is that they are not in there solely for the purpose of making profit. Yeah, they may undertake some activities that will give them profit, but their main purpose is not for obtaining or getting profit, not entirely. But they might do some side, one or two side things that may end up earning some income. All right. So here the word profit is actually toned down. The words that we use here is what? Income. All right. So basically that is that. So you will see there are other names like non-trading organization, but meanwhile they may do a little trading, but their sole purpose is not for trading. All right. So another name for this non-profit making organization, if you can see it somewhere, it may go like non-trading. All right, non-trading. So if you see it, it is the same thing. All right. So basically, that doesn't mean they don't trade entirely, but their major purpose is not for trading. All right. So their major purpose is to actually seek the welfare of its members. So there is a little contrast between the profit making organization and the non-profit making organization. So, for example, if you have a non-profit making organization, so let's say a profit making organization, and you are comparing it to a non-profit making or non-trading organization, what you hear is that there are certain terminological differences. Now, a typical example is the fact that here you know that they will be doing trading. So you know that there is the preparation of trading profit and what? And loss account. Trading profit and loss account. But here we don't do that. All right. So in place of the trading profit and loss making profit and loss account, here what you will see is that there will be instead a preparation of what? Income and expenditure. All right. Income and expenditure. So that is what you see. Income and expenditure account. So that is a simple contrast between them. All right. So as part of introducing it to you, this is what you should know. And so when you get profit, you see here, you may get a net profit. All right. Or you may get what? A net loss at the end of the day. But here, what do we call the net profit? We actually call it what? A surplus. A surplus. All right. So we actually call it a surplus. When you get a loss, that one will be called what? A deficit. All right. A deficit. So the surplus is when you had your income exceeding your expenditure, and the deficit is when you have the expenditure exceeding what? The income. So basically, that is how it looks like. All right. So in a profit-making organization, you see that as part of preparing your cash book, there is something, you're preparing your final account. There is something you prepare. you need to know your cash balances. So you be doing like a cash book. All right. But here, the terminology for the cash book is actually called receipts and payment. All right. Receipt and payment. All right. So these are some simple terminologies that you the differential terminologies that you'll be facing. All right. So basically that is that. Of course, these people will prepare a balance sheet, and the same thing will happen here. Balance sheet is balance sheet. It doesn't change name. All right. So here too you have balance sheet. You'll be preparing the balance sheet. All right. So we are going to go in there and try to look at just the non-profit making organization, some terminologies that you'll be facing and how you go around it in this video. Then in the next video, what we'll be looking is that we will probably pick up practical questions and we will be solving. All right. So now let's turn our attention to just the non-profit making organization and the terminologies you see in there and how you are going to go about it. So let's see. We have not non-trading or not-for-profit making organization. All right. Now, like I said, their financial account is bordered on the income and expenditure. All right. So let's look at some of their incomes and some of their expenditure. All right. And after that, we will just give a format of that and we will continue from there. So we said that their final account. All right. We will have income and expenditure. So let's use this portion for the income and use this portion for the expenditure. So we are going to find out how they derive their income. All right. So what are some of their incomes, the incomes that they receive? So you see, this is a not-for-profit making organization. How do you think they get money? Because they are not going to sell. So how do you think they get money? So the first thing that must come to your mind is that this is a cooperative society sort of. How do you think they get money? They get money from the contribution of their members. All right. So, and that we call it subscription. So membership subscription or members subscription. All right. So that is the name. Members subscription. All right. So like the way you watch this channel, you subscribe to the channel. That is how that one to function. So you subscribe, you want to become part of it. All right. So that is one way they get their funds. All right. So through membership subscription. And we will look at that. All right. We will take them one by one and look at it. Then, so what is a subscription? A subscription is the payment that the members make as part of being members of the organization. All right. So this fan club, that fan club, you'll be contributing money. All right. Together. All right. So like a welfare that they are paying. Okay. So that is basically that. So that is money they pay on regular basis. But in this membership, there is another terminology called a life membership. Life membership. Life membership. Now, what is the difference between the membership subscription and life membership subscription? Now, the difference is simple. So you know that if you are in a group, they say that every month everybody should pay 10 cedis, all right? Or let's say $1 or 100 naira or 1,000 naira, sorry. So you know that this is the money that you are supposed to pay every month. So when you realize that by the time the year ends, you have paid like 120 Ghana cedis or $12 or let's say 12,000 naira. All right. So that is what you would have been paying. Now, some of the members can decide to say, oh, okay, we are doing a life membership subscription. We are going to pay subscription for like 50 years down so that we won't be paying every month or every year. So they pay for a very long period. All right. So they pay down. All right. So basically that is what they do. So that is the concept of the life membership. All right. So when the members actually make the subscription over a long period of time, they are not just paying for the next year. They are paying for like 20 years, 10 years, some 5 years. It's like they are paying more. All right. It's a long term, it's not a short term. Neither is it a medium term. They are just paying. All right. So basically, that is that. So that is what they go on to do. All right. So when we talk of live membership, this is just a situation where you have the club members making payments for a very substantial amount. All right. That will run for a long period of time. Sometimes it is for the remaining useful life of the club. All right. So that is that. And we will look at how we treat this one, because I will explain to you the concept of the income and expenditure. All right. So like we said, it's like the P&L, and like P&L is prepared for how many years? Just 1 year. So you can't put a 50-year life membership subscription into a 1 year financial statement. All right. And that is why these are titled for the year ended. So it is one particular year. All right. So basically that is that. What are the other source of the income of the not-for-profit making organization? So you may have other sources of income. I know all right. So other source of income like entrance fee before you join. All right. Before you join, you might be paying entrance fee. Okay. So entrance fee is one of them. Sometimes too, they receive donations, and please be careful. This one is donation that they receive. So donation what? Received, not donation paid. If you pay the donation, to rather be a what? An expenditure. All right. So you have donation received, the donation that you are receiving. Sometimes too, the government give grants to them. Government grants. Government grants. All right. So sometimes the government also give grants to them. So just to support the activities of the society or the not-profit making organization. So it happens. All right. Then we have another word called honorarium. Honorarium. Now, what is honorarium? Now, when you do something for somebody and the person is actually not giving you payment, but is just giving you something to honor what you do, we call it honorarium. All right. So basically that you do something good for somebody, instead of the person you negotiating that the person should pay you. You didn't agree any payment concept, but the person feel like you've done something good and you are what? He wants to give you something. And that is what we call what? Honorarium. And here to be careful, because the honorarium is the one that you receive, not the one that you give out. All right. Because when you give out, it becomes an expenditure. Because sometimes these not-for-profit making organizations bring people in to do certain things for them. And when those people are done, they give them honorarium. All right. So basically that is that. All right. Then there is another one we call the trading. So whatever they are trading in, they can get something from it. Usually we call it bar trading. But it is not always like a bar trading. It's like they will be trading in something. All right. So t-shirts trading, something trading. All right. And that will generate for them some sort of income. All right. So these are things that you might see. All right. Sometimes it can be a rent income. They gave out some part of their building and they are receiving a rent income. Other times too, you may have interest, all right, where they deposit their money somewhere and they will be receiving interest on the money. So basically, these are some major sources of income that they will receive. All right. So if you see these things in your exam, you should know that they are part of the income and expenditure, especially the income side. All right. So that is that. As for the expenses, I think your guess is as good as mine. We have so many expenses. All right, it is a receipt and payment. They have so many expenses in their receipt and payment. There are so many expenses, so many of them that you can mention, and you can pick them from the things you learned in the normal profit-making organization. So some of their expenses herein will be like donation paid, right? So donation given out. Then even the honorarium, all right? So that one too, honor. Oh, I spelled it wrongly. All right. So some people will spell it like the normal honor. All right. So some people will spell it honor. So, but I think the correct one is honor. All right, or honorarium. All right. So the one that you see. So, all right, giving. So the ones that you rather. Then there are other expenses like, of course, they might also be buying some stuff like stationery. All right. Then what else? Rent. They may be paying rent. So rent, let's say rent and rates. All right. What else? They may be buying some equipment. So some PPEs. All right. So that they buy. So it's an expenditure. So PPE, property, plant, and equipment. So you may have a building. You may have a, what do you call it? Furniture and fittings, like all those things. There may be what we call competition prizes, because you know these things, when these people, when they are having fun time, they award people. So plaques, all right, they say you are the one that run faster, they are giving you an award and all those things. So they give you, so all those competition prizes, all right, thing that they have in there. All right, so like speech and prize giving, day, when you win something, they give you something. All right, so those things that they will buy to give. All right, so those are that. Okay, the expenses are many, and as far as they are operating a trading, there will be, let's say, bar expenses. All right, and as many as you can get, because so far as the money is leaving, then that's it. All right, money is leaving. So it's like your cash book credit side. When money is leaving, money is leaving. All right, so basically that is that. All right, so that is that. So these are things that you should be able to deal with in the income and expenditure. All right, so basically that is that. All right. Then after that, your next thing to learn to do is to learn how to do the balance sheet. As for the balance sheet, it's straightforward. So we know how to prepare a balance sheet. Is that not it? So balance sheet. And here we've changed the name small, because these days we call it what? Statements of financial position. All right. And as for this one, you know that before you can be able to prepare this, you know the drill. The drill is that you will need your non-current assets. All right. So you will need them, what we normally call the fixed assets. All right. You will need them. But remember how we always do it? Of course, you will see things of depreciation. All right. So take note of that. You see the things of depreciation. So what you're going to do is to bring all your assets. So we will usually have costs, accumulate. So accumulated depreciation. Then what do you have? Net book value. Is that not? So that is what you'll be doing. So you will list all your fixed assets. So let's say you have building, you have F&F, you have plant and equipment, and let's say you have what? Motor vehicle. All right. So you go on and list it as you know. At the end of the day, the figure here is useful. Then you come to what? Your current assets. All right. Now, when you are doing your current asset, you need to be very, very careful. All right. Because in the current asset, of course, they may have inventory. Now the inventory may be coming from the bar, so the bar inventory, all right, so the bar stock, all right, so that is that, the stock. So take note of that. You will need that, all right. So let's just try and push those things here. You will need the stock. Now, after stock, what do you normally do? Normally, what do you do? Don't you bring in your trade debtors? You bring in your trade debtors. But here you don't have trade debtors, because here it's not about a profit-making organization. All right. So here, who will be your debtors? Your debtors will be your members who have not paid you the money they are supposed to be paying you. All right. So here, the next thing that you bring in place of your debtors is subscription what? Owings. Carry down. What do I mean carry down? That is the subscription they are owing at the end of the year, not at the beginning of the year, but what? At the end of the year. So that is that. So the subscription carry down. All right. So that is what you bring in. Then what is the next thing you do? The next thing you consider normally after your receivables is what? Prepayment. So if there is any prepayment, and please, the prepayment, you should be careful. It is expenses prepaid, not incomes. All right. So expenses what? Prepaid. So for example, if you have rent prepaid and all those things, then you bring it in. All right. So that is that. Then what else do you do? Is it not your cash at hand and cash at bank? So cash and bank, right? So basically that is what you do. So you do this and you get all your current assets. But bear in mind that the trick here is this. The trick here is that you have to do a workings to find this. You will have to do a workings to find this. You have to do a workings to find this. So these things doesn't come cheap. You have to do a workings for it. All right. So basically that is that. Okay. Then you come to your, what do we call it? Your current liabilities. Is that not it? So you have your current liabilities. Now, in your current liabilities, what do you normally do? Is it not trade creditors? But here you won't have trade creditors. All right. So basically that is that. And so your trade creditors here will be subscription prepaid. And why? This is an income account, and I will explain it further. All right. So we have subscription prepaid. So the members give you, the non-profit making organization, money. All right. And they give you a money over and above 1 year. You see that? And since they've given you money over and above 1 year, what does it mean? What it means is that that money they've given you, you owe them. They may ask you to give it to them back. All right. So that is what happens. You have taken money you have not worked for. It's a liability. All right. So that is that. And I remember saying this thing in class that my good ladies should be careful about always collecting things they've not worked for. All right. So it's dangerous because at that point it's a liability. So be very, very careful. All right. So that is that. So subscription prepaid carry down, all right, becomes a liability. All right, because you have over collected. You see, when it is rent prepaid or expenses prepaid, the person who collected the money has over collected, and so you say you have an asset. So now that you are the one who have over collected, then you rather have the liability. Is that okay? So basically that is that. If that is the case, then the life membership will also be a liability. But the life membership, because it's long term, we will keep it at non-current liability. All right. So basically that is that. So now this is what you have. And what else do you have? Maybe expenses owings. All right. All forms of expenses that you are owing. So rent owings or any form of expenses that you are owing, those carry downs, all right, will come in here. All right. So you have this, and don't forget you less this. So once you less it from this, then you get your figure here, which you will add up to the figure you have at the top, right? Okay, you add it up and you now get your what we call your capital employed. All right, so that is that. Your first balancing figure. Then you come to finance by. And like I said, these things will come via workings, all right? So workings, you have to do some workings for them. All right. So finance by, what do you normally do? Capital, right? Now here we don't have the word capital. What we call it is what? The accumulated what? Fund. So you have your opening accumulated fund. All right. Opening accumulated fund. So you will have that. So that is that. So you have your opening accumulated fund, and that one too will come by a working. And I'm going to show you how you do all these kind of workings. I'll be with you in that perspective. All right. So you will do a workings, and I feel like this is the first working that you should normally do. All right. So we number that one as our first workings. All right. So basically that is that. So you have that. You have that. Then what do you do? As you have your accumulated fund, if there is any drawings that they made and all those things, you factor it in there. All right. But that is your capital side. Okay. So normally you have your capital, and other times you have retained earnings and all those things. Here you don't have that because it's a not profit making organization. All right. So what you do have is your accumulated fund, and that is what you are. Now, after that, you can now bring in your life membership. All right. So your life membership balances. All right. At the end of that year. Okay. So basically, that is that. And it should balance completely. All right. So that is that. But bear in mind, when you are doing the current liability, you may have creditors from bar trading. All right. You may have creditors. You can add them. All right. So you can add those ones. You may have bank overdraft. All right. So your bank balance, it may not all be an asset. All right. It may not all be an asset. It might be an overdraft. So you can have bank overdraft. All right. So it depends on the question. So the bank overdraft, your creditors, you bring in all of them. All right. So basically that is how this one looks like. All right. So the next attempt is to show you how you solve a question. All right, that is coming from a non-for-profit making organization. You have to learn the procedures of solving a question. All right, so what we're going to go through is to go through the step-by-step approach of answering a not-for-profit making organization question. All right, I hope you are ready for that. All right. So how do we approach it? So we will have our template, solving a non-profit making organization questions. All right. So like we did except in class, the first thing that you should do is to prepare your statement of affairs. Get that marks down. Statement of affairs. All right. What is the essence of the statement of affairs? To get your opening what? Accumulated fund. All right. So that is the purpose. Opening accumulated fund. And how do you do that? It's just the same thing as we learned in the incomplete account. All right. So here you are preparing this thing as at. Please, you are using the first day of the accounting period. So you are using the opening figures. All right. So be careful. You are using the opening figure. So you will list all your assets. Now we know that this thing is given by equity, which is here in your accumulated fund, is given by what? Assets. minus liabilities. All right. So all that you are going to do is to list all your assets. So list all the assets, both the non-current asset, which we call fixed asset, and what? The current assets. All right. List them together and you know them. All right. You know them. All right. But the clue is that when you are listing these assets, you are using the net book values. And good news for you is that these things are opening figures. So the figures that you are likely to get over there are net book values. All right, so that is that. Unless the question tells you that the asset was bought some years ago and they didn't calculate the depreciation, but normally it is already done. All right, so basically that is that. So you use the net book values. Then when you come to the asset, the current asset, be mindful of subscription, because you are going to use the opening subscription word owings. All right, opening subscription owings. So please find out the subscription that you are putting there. Is it subscription owings? All right, so find out. And be careful also of rent prepayment, because any expenditure that they have prepaid even at the beginning of that one. So opening prepaid expenditure. All right. So maybe in last year, they prepaid an expenditure into this year. So it means that there is an opening prepay. Right. So basically that is that. So just be mindful of that. Once you have listed all your assets, you can now bring in your liabilities. All right. So the liabilities, yes, if there were any prepaid subscription coming from last year, then it means that that is your clue. All right. So list all your liabilities. All right. So basically that is that. You know how to do all these things, right? Creditors are liabilities, right? Bank overdraft are liabilities, right? So you list all your liabilities, and we will be looking at questions and you will see them. So the figure that you will get will be your what? Accumulated fund, your opening accumulated fund. All right. So that is that. So that is the first thing you do, and we're going to practice it very soon. Then, after preparing the statement of affairs, the next thing that you focus on to do is the income side. All right. So the income side of the entity, the income. All right. So what did we talk about? For example, we spoke about bar trading. So if there is any trading activities they are doing, then you need to do that. Now, the bar trading, you know how to do a trading account. So you will need your sales. Is that not it? Sales. Another name for sales is what? Revenue. Another name for that is what? Turnover. Be careful. Turnover. All right. So you will need that. All right. Then what do? You less cost of sales, or maybe if there is return inwards, you take it out first. All right. But here you don't normally get that. So you do your less cost of sales. Now, what goes into your cost of sales? Opening stock, right? Bar opening stock. And bear in mind that opening stock will always be inside the opening figures that you use to prepare the statement of affairs. It will always be inside this current asset. It will always be there. That is where you pick it out from. So opening stock, what do? Add purchases. And that is where the problem sometimes is, because questions normally don't give you the purchases. So you won't have these purchases. You have to work for it normally. All right. So you add purchases. Now, how do you work for your purchases? Now, as you did in incomplete records, you work for your purchases by going to do what we call purchases ledger control account. Is that not it? Purchases ledger control account. Now, what is the other name for purchases ledger control account? Purchases ledger control account is typically your creditors ledger. So your creditors account. That is it. It's typically that. And if you know how that one works, then it makes your job Very easy. And so if you don't know how that one works, I encourage you to go back and watch the videos on control account. Now, this is a creditor. So creditor, the opening balance is always at what? The credit side, right? So you have this. That's it. All right. Then anything that reduces your credit figure will be at the debit side. What are the things that you think that will reduce it? We learned that there will be return what? Outwards, which you don't normally get in non-for-profit making organization. You may not get. What else reduces it? What else reduces it is the payment that you make. So in control account, we will say cash payment, but here we call it the receipt and payment account. So you go to the receipt and payment, you will see how much they paid for this. So receipt and payment, all right? So basically, that is that. Then once you have that, you may have some balance carry down to also be given, all right? So your creditors figure carry down. Now, when you have this, you have your total, and you realize that the thing is not balancing. What you have is your credit purchases. That's your credit purchase, and that is the missing figure that you have found. So you find it, and now everything what balances. All right. So basically that is that. So you have a balance carried down here. Of course, 8 balance brought down will be here. And ladies and gentlemen, this figure that you have here will be going into your statement of financial position or the balance sheet. That figure that you always have here. All right, as your creditor. All right, so take note of that. And so when you find this one, as you found this one, you are able to determine your credit purchases. All right, so that is that. So that is how you find purchases. So you find purchases by doing a workings, and that workings is probably your workings 2 or something. All right, so that is that. Okay, so that is what you do. Now you have this. What do you do? Less what? Closing stock. So once you less closing stock, you can get your what? Bar gross profit or gross income. So if there is any bar expenses, you less those expenses. If the bar has some assets, all right, that they depreciated, so you may bring depreciation. All right, so and all forms of expenses that you know, bar rent, whatever, strictly to the bar, all right, not the general organization, strictly to the bar activity that they are doing. All right, so not the general. If it is rent, it should be rent for the bar, just specifically for the bar. All right, so that is that. So look out, if there are bar expenses, then you treat it over there. So you deduct your bar expenses and you have net income. All right, so this one will be a representation of something that will be in the income and expenditure. So this one is going to where the income and expenditure, particularly the income side. All right, so look at it very well because we will be practicing very soon. Now, after you have done this, the next thing you look out to do is to do the subscription. All right, so let's call it here. So it's a subscription account. It's also an income inside your income receipt and payment. You will see it, so you prepare a subscription account. Now, a subscription account is actually an income account. So bear in mind, if it is an income account, then how will it be? So you have here, what do you have? You have, is it prepaid or owings? Of course, as you can see, you have prepaid brought down because it's an income account. All right, so anytime there is prepayment, it's an owings. So that is basically that is that. Then we have owings what brought down. So that is how it works. Because it's not an asset account, it's an income account. If it were to be asset account, then a subscription, if it were to be an expenditure account, sorry, then the subscription prepaid would have been asset, which means you'd have debited this side. All right, so that is that. But the prepaid becomes a liability, so you have to credit it. All right. So that is that. Then you look into your receipt and payment. You see, since this one is an income account, the receipt and payment will have it at the debit side. So you will see receipt and payment, the payment that they've made. All right. But here, bear in mind, these are things that are coming from last year. All right. Subscription issues of last year. All right. So when they were in last year, there were some that were owing. All right. When they were in last year, there were some that prepaid into this year. All right. So that is how you see it. Okay. So basically, that is that. Now, what else can you see inside this one? If you have this, as you have seen. Now, the next thing that can happen is that you may have some people who decide not to pay. Their subscription has become bad. So what do? If there is a bad subscription, so that is what will happen. So we call it bad debt on subscription. Bad debt on subscription. All right, so that one too will be like this. All right, then you realize that once you total, or before then, you realize that you have prepaid carry down. What is that prepaid carry down? The prepaid carry down is the prepayment they did in this year for next year. All right, so basically that is that. So the prepayment the members have done in this year for next year. All right, the payment they've done for next year. So here too, what do you have? You have something like your closing owings. We call it owings carry down. All right, so basically that is that. Now you therefore do your totals and you realize that it's not balancing. What is not making it balance is your prepayment, all right, the difference, which will go to your income and expenditure account. So here will be the subscription for the year. All right, so basically that is that. But these figures are also going into your SOFP. So to every account that you prepare, make sure you understand that there are figures that are going to the SOFP. All right, like this subscription owings carry down will go into your current assets. Then this subscription prepaid here will go into your what? Current liability. All right, so basically that is that. With that said, let's talk about life membership subscription. Life membership. Now you see, this is a very simple thing. You are preparing an income and expenditure. So you will need the subscriptions. And so like you did before, the subscription for the year will go to the income and expenditure for the year. But if somebody, let's say, paid subscription for, let's say, 10 years, then it means that once we are preparing our income and expenditure for just 1 year, what do we do? What do we do? So any amount that he paid, what do? We have to divide it over 10 years. Is that okay? So let's say the person paid 10,000. You will divide it over 10 years and only pay 1,000 to what? The income and expenditure. What about the 9,000 that is remaining? It means the person has prepaid and that one becomes your liability. So part of your NCL. That's why we added it to the finance by aspect. All right. So that is that. So that is what happens. So during the year, you realize that some people have paid subscription, life membership subscription. They have paid for so many, like for a period of time. All right, so that is what they have done. Now, whenever the payment is done, you will receive it at the debit side of your receipt and payment. That is what happens. You receive it at the debit side of your receipt and payment. All right, so the corresponding entry into the life membership is always at the credit side. So if there is any balance brought down, then it's just like a prepaid, right? Brought down. So you have it here. Balance brought down. Nobody can owe a life membership subscription because it's not by force. They are just paying it. All right. So this is where you have your balance brought down. Now you amortize it. What do I mean by amortizing it? You are dividing it by the remaining useful life that you have here in that particular year. So let's say, so you have to be very careful and write the years. Let's say this thing started in 2020 and you have 2020. You have to divide the life membership over the useful life. And whatever you get for 1 year, that is what you are taking into your income and expenditure. All right, so that is that. So here you do I and E, whatever that you divide to get, all right, you put it in there. So assuming this thing is 10,000 and it's for 10 years, when you divide, so our figure here is 10,000. It may not be a balance drawdown per se, but it can come from your RMP, your receipt and payment. So you just put it here, then you divide it. So let's say it's 10,000, which means this year 1,000 is going. Have you seen that? But at the end of the year, there will be a balance carried down of how much? A balance carried down of 9,000, so that this thing can balance off in the year 2020 as what? 10,000. 10,000. Which tells you that in the year 2021, what is going to happen? Oh, in the year 2021, my balance carried down here will be my balance brought down. So I'll bring it in. So which is, in this case, is what? 9,000. Is that not it? Is that not it? All right, so 9,000. Let's say in this year, another set of people also made an additional, what do you call it? A life membership. Let's say this time around, we have 5 people who are paying life membership of, let's say, 4,000 Ghana cedis for, let's say, 20 years. So if I multiply, this thing is going to give you, so you will see it in your receipt and payment. So your RMP, you will see it. When I multiply, it's what? 20,000, right? So I have 20,000. So I see it. Then what is happening? I'm going to amortize them. You see, this one was for 10 years. And so this year too, in this 2021, I and E, this particular one, 1,000 is going. And this particular one too, I'm going to amortize it again. So this over 20 years, I think that one is like how much? That one too is like an additional 1,000, right? So that is that. So an additional 1,000. All right. So you do it each and every individual's own. Then you see that at the end of the year, there is a balance carried down. Like I told you, in this year, the balance carried down, this figure, is going into my non-current liability. All right. So how much do you think you are left with? This one should be 29,000, right? If this is 29,000, then it means the balance here is 27,000. Is that it? So then you have 29 is balancing. All right. Now this balancing, this figure, balance carried down, is going into my balance sheet, non-current, and these two, every year's money, will be going into my income and expenditure. All right. So that is that. So it continues like that till the money gets finished. But you don't need to do for all of them. You just have to make sure that you are preparing a balance sheet for a particular year. So if you get the figure that has to go to your income and expenditure, the balance carried down goes to your balance sheet. So this is what you do. Now, the last workings, all right, is any form of expenditure and expenditure account, all right? So be careful. So if you have a rent expenditure, or let me generalize it, all forms of expenditure account. We've seen how you do all forms of income working. So all form of expenses. So you create an expenses account. For notably is your rent. Normally it is rent or rate, all right? Notably. All right. Now, this is the expense. So we all know that prepaid brought down will be here, and owings brought down will rather be what? Here. That is the opposite of the income account, which is a subscription account. All right. So that is that. If you know this, then you know that your owings carried down will be here, which of course will go to your balance sheet. All right. Which side of your balance sheet? This one is an expense. So which side of your balance sheet? Good. Current liabilities. Then you have prepaid carried down at the end of the year. These are the beginnings and they are coming from last year. And these are in your current year for the next year. All right. Get the difference well. And if you know this one is going to your current liability, then this one will go to where? Your current asset. Then you look inside your receipt and payment. Since this one is an expenditure, where will we find it? In the receipt and payment, debit or credit? Of course, your credit. So it means that the corresponding entry will be what? Here. All right. So the difference, therefore, of your rent will go to your income and expenditure. So this is where you will pick it into the income and expenditure. You do this for all forms of expenses. All right. Now, to end this, take note of depreciation. All right. You've learned how to do depreciation. So it's part of the expenses that should go to your income and expenditure. Then take note of other income like interest received. All right. Interest received. All right. So take note. Apart from that, the way you do expenses for all forms of account suffice. All right. So we will drop it here. In the next video, we will pick up an example and we will practice with it. I hope you've learned well, and don't forget to share this video to your friends and also subscribe. All right. Thank you very much. I'll see you in the part 2 of not-for-profit making organization. God bless you. Bye-bye.